Well, greetings everyone, and welcome to this webinar on Washington policy and markets, an update on DC. I'm Michael O'Keefe, Stifel's Chief Investment Officer, and today I'm joined by Brian Gardner, Stifel's Chief Washington Policy Strategist. Welcome, Brian.
Thanks, Michael. Good to be with you. Thanks for having me.
Oh, it's our pleasure. Before we jump into it, I'll just mention to folks, in case anybody's dialing in or otherwise wants to obtain them, we will have some slides that we're going to sort of anchor on today which are being shared sort of live on Zoom. But if you go to stifel.com on the individuals page, you'll see on the upper right a link to the slides. So especially for those that have dialed in, if you'd like to refer to the material, that's available out on stifel.com, the individuals page on the upper right. So we're going to get started, and this, as has been our practice, will be a little bit of a Q&A. I want to sort of frame how we're looking at the market environment and then really turn to a series of questions for Brian on an update with DC. But before we get into that, let me just pull up a couple of things that kind of frame the way we've been looking at things from an investment and market perspective. So really, like many, we published an outlook at the beginning of the year. And that outlook, our base case, if you will, has been positive. The idea that we're sitting in an environment where hopefully the vaccination campaign is kicking in. We're on a march to herd immunity. We'll look at that. But importantly, that the federal government has been and will continue to be supportive. So think of it as a positive outlook, almost built on the idea of, among other things, strong support from DC. So what happens in DC really makes a big difference in terms of how things are going to unfold. We do make sense of also and sort of acknowledge both the tails of our outlook, a bull case and a bear case. And among other things that might trigger the bear case might be a policy error from Washington. So again, the topic of DC and what's going on there is super important to our outlook. Now, staying on the pandemic for a quick second, I think everybody's aware that the vaccination efforts are underway. We sort of marched our way to 2 million a day, 2.5 million a day. And just in the last few days, we've been averaging around 3 million shots per day. So we're on this march to herd immunity here in the US. And you can see the models as presented on the left side of this chart show the basically daily cases falling off. That dotted line is where we are today. And the models are projecting basically a calming down of the infections as the herd immunity kicks in. We do sort of look at herd immunity in a few different ways, but what I'll mention though is obviously it's all off the sort of the backdrop of strong efforts from a medical research perspective. So this chart just sort of captures all the things that are going on in terms of vaccines. There's just a ton of different efforts going on with a number that have been approved or have had limited approval. And then also we like to acknowledge there's also lots of work that continues to go on in terms of therapeutics. So for those that do get COVID, increasingly that there are medications being made available. And what we should expect is innovation to continue. I know, for example, that there are some vaccines that number one are being developed that number one can be stored at room temperature and number two may be taken by inhaling the vaccine rather than getting a shot. So again, some innovation that may unfold later in the year, but it's been a strong effort. And again, we view ourselves as on a path to herd immunity. So with that sort of support, right, in terms of the recovery from the pandemic, turn back to DC is super important. And so Brian, I want to jump into it and really start with the $1.9 trillion relief package that has been passed this year. Quite a large number relative to even what we saw in 2020. But I guess from your perspective, I'd love to hear just super quickly some things that you are focused on as this package unfolded, how you're seeing it, and in terms of what you view as important as it relates to this package.
Yeah, I think from an investment perspective, the most important part of the package was really the support for the less well-off in the country, those people that have been most impacted. That's the extension of unemployment benefits, the checks obviously to all individuals below the income threshold was a big deal as well. And I always thought that there was fairly broad bipartisan support to get those. I mean, I guess the surprising part was how much beyond those steps Congress and the new administration went. It did get to a number that I did not expect it to. Democrats stayed very unified behind the new administration. I think there's a fair amount of spending in that bill that is not for calendar year 2021, especially the school issues, the reopening funds. Those are longer term, actually, if you look at the budget projections. I don't think it's going to be all at once that we feel the effect of this legislation. I think actually it's going to be a little bit longer term than some folks understand, with some local spending, support for local governments going a little bit beyond just the emergency of the pandemic.
Now, this was passed, if I understand correctly, with budget reconciliation, so simple majority in the Senate. And I think one item that sort of fell out of the package because it really didn't qualify under budget reconciliation was minimum wage.
Right.
So curious, just to stay focused on that for a minute, what your view is on how that might get readdressed here in the future.
And I think it is going to be readdressed. There is actually broad bipartisan support for increasing the current minimum wage, just not to $15 an hour. So a number of Democrats, everybody in Washington and on the news channels have been focused on one or two Democrats, Senator Joe Manchin from West Virginia, Kristen Sinema from Arizona. There were more than just those two Democrats that voted against a $15 minimum wage. So I think that something like 11, which Manchin has thrown out there, is probably going to attract enough bipartisan support to be passed in the future. When that is, I don't think has been decided yet. I think there's a lot of strategizing going on right now to determine what the legislative schedule is going to be. It could get tucked into an infrastructure bill of some sort. But I think looking at it, people should be confident, not guaranteed, but confident that it's going to go up. It's probably going to go to 11, probably going to be indexed for inflation at that point, which means these fights probably dissipate for the longer term once you index it for inflation.
Got it. So, when we were preparing for today, we both talked about the idea that tax increases are really in focus, should sort of be a substantive part of our discussion. So I've just pulled up sort of a simple layout of some things that we might be expecting. But why don't you walk us through your view on the tax package, and we'll get to infrastructure. But I'd be interested to confirm with you that it may be tied to infrastructure, which we'll get to in a minute.
So let's start over on the left with corporate taxes. And what you're seeing here on this slide are the proposals from the Biden campaign. They can change, they can be added to, they can be modified. They probably will during the legislative process, but it's a good starting point. So let's start with corporate taxes on the left. The Biden administration proposed going from 28 to 21%. Those of you remember back in 2017, the rate cut was from 35 down to 21, which made the United States more competitive globally, because when you add in state and local income taxes, we were, at least numerically, not overly competitive with the rest of the world on income tax, on corporate income taxes. There's going to be a fight on this. Bernie Sanders has already counter-offered, if you will, going back to 35. There are a number of centrist Democrats who are already throwing out a 25% number, which actually in some ways makes sense, because we don't know what the rest of the tax bill will look like in deep detail. But you think of changes that were made in 2017 on net operating losses and carrybacks and carry forwards. There were limits, and some of it was wiped out, some of it reinstated during the CARES Act, but there were changes to that law. There's also a cap put on the deduction of interest expenses by corporations. So, if you take those away and leave them out and don't bring them back, but at the same time you're increasing the tax rate, you've gone from reform to really a tax increase. It would also create a 15% minimum tax for companies with more than $100 million in in book income, which is different from what we see in the tax code. That's kind of marrying accounting and tax regimes, which is very uncommon, and then would double the tax rate on international income. For individual taxes, the rate would go up for the top rate to 39.6 from 37. That's the old Obama rate at 39.6. It's interesting. So there would be a cap on itemized deductions at 28%. Now, the campaign, the Biden campaign said they wouldn't raise rates on people making over $400,000, but they were vague on that. And so there's some scuttlebutt now on what the $400,000 means. Does it mean for all taxpayers? Does it mean for single filers? Because if it doesn't, single filers making over 200 are going to get a tax increase, and the household number would be 400,000. And the same for the payroll tax, which is supposed to fund some increase in Social Security, or refurbish the Social Security fund. It's an odd dynamic what they've created here, what they proposed, I should say, because Social Security taxes, payroll taxes go away at $137,000 because your benefit is capped. They would bring it back at $400,000. So you're creating a donut, which I think that complexity is just going to scare away a number of Democrats. So I'm kind of skeptical. When I look at the whole package, if I had to pick out one thing, which I'm especially skeptical is going to make the final cut, that's it. On the investment and retirement taxes, capital gains, dividends made would be taxed as ordinary income on incomes above $1 million. The plan would eliminate the stepped up basis at death. Don't know how they're going to do that yet. There are competing alternatives. One, you have a taxable event right at death. The other is that there's a carry forward, that the taxable event doesn't happen until the heir disposes of the asset. I suspect that would get a little bit more support because I think there are some Democratic senators, especially representing more rural farm areas, that if you have a ranch that's been in the family forever, you're essentially forcing the sale of the family farm at that point. So I think that's going to give some Democrats some agita, and then increasing the estate tax, and I think that's pretty likely.
Yeah, so just staying on the step up basis, which I think has been a focus for us and our clients, the idea that you can pass on a low basis asset to your heirs has been obviously super valuable, and I think we all tend to think about it from the perspective of owning stocks, right? That's what we're doing. We're working with clients, they own stocks, and they have a low cost basis, and it's a very helpful way to basically maintain that cost basis. But it was very striking. I have been reading some of these articles about other kinds of assets, farms being a good example, and it does sort of the two sort of adjustments that I've heard about. Number one was maybe having some amount over which the gain would get taxes. I think the number I saw was $1 million.
$1 million, right?
Yeah, give them a little bit of room, and then maybe it's what you were getting at, but basically almost a payment plan. So okay, the step up occurs, the liability set, but then they let people pay it off over 5 or 10 years or something like that. So you can see them sort of adjusting and trying to think through those scenarios against the backdrop of their constituents and who they're representing.
And when we just to digress for a second, we're talking about the COVID bill and how that passed so easily because of unanimous Democratic support. That's not going to be the case with the tax bill because, as you mentioned, local issues start to play into this. Local issues don't really play into a pandemic emergency relief bill. That's getting money out the door to people who need it, and there are no one's ox is being gored. Right. Now you get into a tax bill, the politics are quite different.
Yeah. Well, let's turn to another sort of major topic for today, which is infrastructure. So we hear that there will be at least some kind of announcement tomorrow. And we've sort of in this exhibit broken it into two sections: traditional infrastructure and what I think is being coined human infrastructure. So Brian, why don't you walk us through this, both structurally, how you see it unfolding, and the number that, again, that's being kicked around is $3 to $4 trillion. Be interested to hear how it breaks down between these two columns and what your thoughts are.
Yeah, so it's quite a range, 3 to 4 trillion. I mean, that's 33% higher. So that's a wide range. I think a lot of it has to do with how you account for different tax credits and the like. So there's some accounting and budgeting issues on why the difference between 3 and 4. There are some Democrats who are throwing out larger numbers. It's probably a messaging issue just to give them some cover when they settle for a lower issue in the 3 to 4 trillion range. Yeah, infrastructure has gone beyond its traditional meaning. I think a lot of us on this call and webinar think of infrastructure as brick and mortar, building, roads, bridges, ports, rails, now broadband, but manufacturing, really jobs related. And that will definitely be part of it. That's probably based on past proposals on the Hill and in the administration, the campaign. It's probably around $500 billion, with the rest going for human infrastructure. Free community college, obviously somebody's going to pay for it. Universal pre-K, paid leave, elderly care. There's a healthcare component in there. There's a child tax credit as you have 2-earner families with both parents now working in increasing numbers. It's not a new phenomenon, but it certainly has increased. And they need daycare for children when they're not in school. What kind of tax credits are there to help defray the costs, or for one parent to stay home? So that's part of the human infrastructure debate.
Got it. So when we see this breakdown, do you have a sense for, in your judgment, let's say it's a $3 trillion package, how that'll get allocated between these two columns?
Yeah, I think the left, the traditional infrastructure, transportation, I think that's about 500 billion, and the remainder would go. The bulk of it is really for the right column.
Yeah, and the reason I ask in part is, and we're going to get to sort of congressional support for these different things a little later, more conceptually, but as it relates to infrastructure specifically, how do you see support in terms of bipartisan or not between the left side of this exhibit and the right side? How are you thinking about that?
There is clearly more support for the left side than the right side. And we also didn't get into climate-related agendas. Not clear which side of that chart climate's going to fit in. I could put it in either one, but climate will be a controversial issue. So Republicans, so let me step back for a second. So every 5 years, Congress passes a highway bill, which funds highway surface transportation for 5 years. It is usually done on a bipartisan basis. There is always some controversy because parties have different priorities. Republicans want more roads. They tend to represent more suburban and rural areas where people rely on their cars more, where Democrats are going to look for more funding for rail, mass transportation that addresses their constituencies. So there's a priority issue. There's also a funding issue. Highways spending has been funded by a gas tax, which has not been raised in quite some time. It is becoming less and less efficient over time as people start to transition to electric vehicles. If you're driving an electric car, you're not buying gas, you're not paying the tax, it's not supporting roads. And road construction has always been a user-funded. So how do you fund all of this? Where's that coming from? How are we transitioning into next? There are going to be significant fights over that. So the traditional infrastructure proposal, by and large, is bipartisan. There is support for it, but there are different priorities that can complicate getting a bill passed. The right side of the bill is more complicated. There are certainly Republicans who are interested in different family and child care tax credits that they view as pro-family and fitting in within kind of the Republican agenda. They're going to worry about cost. They're going to worry about effectiveness, that you're giving the right incentives, wrong incentives. So there is some support there, but once you get to some of the other areas, like a mandatory leave program, I think Republicans were okay with going along with that during the CARES Act in a pandemic, but as a normal course of action, I think they're uncomfortable in forcing companies, private employers to provide leave to workers. So there are going to be a lot of controversial subjects. And again, if you add the climate issues to the right side, that's going to make it even more controversial.
Got it. Well, one thing that I think I read today, you're the expert. We're all trying to learn about the way DC works, but I think I read that they're looking at the possibility, and maybe I misread it, of part of this at least being done with budget reconciliation. Can you shed some light on that?
There are numerous layers, and I know a lot of our clients, a lot of our listeners, their eyes are glazing over because we're going into DC process, inside the Beltway stuff. But this stuff is important at the end of the day. So the COVID bill passed with reconciliation. That was actually using the budget resolution from last year, or actually this year, excuse me, from 2021. They're going to look to do a 2022 budget resolution that would be for either infrastructure or tax, or maybe putting them together. There's even some new scuttlebutt that Democratic leaders have found a new way to go back and revise the COVID budget resolution, that they can now stuff some more items in there. So there's a lot of controversy about and questions about how and when to use budget reconciliation. The budget reconciliation is basically is a process by which the Senate can bypass its 60 vote de facto threshold,
right,
and pass legislation on a party line, on a simple majority vote that winds up becoming party line. But there are procedures, there are rules, there are limits. It really has to be a budget bill. It has to, the items that are in the bill have to have a direct and primary impact on the federal budget. So let me give you a couple of examples of what doesn't fit. Just, I think that gives you some context. Let's go back to the COVID bill. The minimum wage increase was jettisoned because it wasn't compliant with reconciliation rules, even though there were budget estimates that an increase in the minimum wage would increase the federal deficit by $54 billion over 10 years. But that wasn't the primary purpose. The primary purpose was not to change the deficit or the debt, it was to change the minimum wage. So that gives you a little context. And within this context on infrastructure, the Biden administration is contemplating a carbon emission-free, zero carbon emissions standard for vehicles by 2035. Well, that is not reconciliation compliant. So they may, and that's why I went back earlier and said, when I'm thinking about climate, what goes in, what, is it on the left side, right side? Because if they decided to do reconciliation for the left side, roads, well, the climate mandate doesn't make the cut. So,
right. And just before we leave infrastructure, just to confirm, do you anticipate? And again, we'll learn more tomorrow, I think. The tax changes and at least version or phase one of infrastructure to be tied together. Would you anticipate that?
If not formally, informally. I think conceptually they're tied together because you're obviously going on a spending binge here, and deficit hawks in both parties are going to want it to be paid for. So that's always been, I think, the goal is to pass an infrastructure bill. This has always been the goal for the Biden administration, is to pass an infrastructure bill and pay for it via a tax increase. Formally marrying the two together, it gets very complicated, very controversial, and there are already controversies that exist without tying them together. So I wouldn't say that you're going to see one unified bill with an infrastructure, transportation section and a tax section. One will go before the other, probably infrastructure going and then a tax bill.
Got it.
But conceptually, the two are married together.
Got it. Okay, well, thanks for that. I want to move to sort of three sort of more rapid fire topics just to close it out here. So the next topic is appointments. So we've just laid out a few examples of Biden appointments, some done, some in process. And the real threshold question to you is more, what are we learning about Biden and his and the plans, if you will, of his administration through these appointments? What are some of your takeaways from this?
So the early appointments, both to the senior levels at the White House and the cabinet positions, were generally what I would consider mainstream Democratic picks. Not overly progressive, clearly left of center. No one doubts that, but generally, in a more traditional type of Democrat. Subsequent nominations, and many of these happened after the Georgia runoff elections, when the administration realized that the incoming administration realized that it would have the control of the Senate and the ability to get more nominees passed, has clearly tilted more progressive. So I think the nominee, I'm sorry, Michael, I can't quite see the left side there, but I'm sorry, the right side, all the way on the right. But so if I get this wrong, to me, the key nominee or appointment so far has been Ron Klain, who is the chief of staff. I think he's running a very tight ship, and he is very open and leaning towards progressives. A lot of Elizabeth Warren allies have been appointed to various positions in the administration. Communications between the chief of staff and kind of the hardcore progressives on Capitol Hill, the AOCs of the world, have been quite frequent. And it's actually starting to get under the skin a little bit, I think, of some more moderate Democrats and some more mainstream Democrats, why the ultra progressives, who can be a bit of troublemakers, are getting such attention. So I think the administration clearly has gone more progressive than it would have had the Georgia elections not tipped the balance of power in the Senate.
Got it. Interesting. Okay, so the next topic, it sort of falls into what we call our geopolitical dashboard. So here are a number of items that we're tracking, kind of risk of issues around the world, and sort of embedded in these really relates to foreign policy from the US. So relations with China, Russia, and Europe sort of highlighted here. So interested in your views on foreign policy, and maybe some comments on the most recent, I think that first official meeting between the administration and China in Alaska.
Let's start there. I think it was a telling meeting for both sides. One, from the Chinese perspective, I think it has crystallized China's view of the US and of the West, that the US is in decline. China feels confident and that it can push forward and doesn't feel like it's going to be pushed around by the US in their view. So the relationship is going to become, I think, more contentious. And so between the tone of the Chinese towards the US delegation, between what has happened prior to the inauguration in Hong Kong with a crackdown on democracy advocates, with increasing boldness towards Taiwan, and obviously the situation with the Uyghurs, I think the US and Biden administration is now very constrained, seen on trade policy. I think the tariffs are staying in place, at least for this foreseeable future, until there's some catalyst that changes the dynamic in the relationship. but the new trade rep has been pretty clear in the press the last couple of days that the tariffs are remaining in place. And I should add that, you know, even with the pandemic put in place, obviously that changes the relationship, the trade relationship, and the flow of goods. But as things start to normalize, it's not clear that China is going to get anywhere close to its commitment for buying U.S. goods that it agreed to during the Trump administration. So I think the tariff regime vis-a-vis the U.S. and China is staying in place at least for this next 6 months. My crystal ball gets a little hazy after that. Things, you know, events happen, things change, but the Russia-West dynamic, Russia-U.S. Also, I don't see much improvement going forward. I actually think Biden helped Putin internally with his comments a few weeks ago, calling Putin a killer. A U.S.-Russian dust-up makes Putin look stronger at home. So I think it enhances his domestic standing, which makes him emboldened to stand up to the U.S. and to Europe. So I think we're probably in status quo there. To me, the interesting part is U.S.-Europe, because it hasn't gotten a lot of attention. You know, I expected at least a question at last week's press conference on Europe, something related to Europe, because it's been an historic trading partner, military ally, and nothing ever came up. So, you know, there have been some thawing of U.S.-Europe relations, but, you know, Europe, and I'm talking just about the continent, I'm not talking about the UK, because I think you have to split those in a post-Brexit era.
Yeah.
The way that Europe has handled the pandemic and the vaccines, which has not been good, they're clearly lagging behind the US, the UK, and Israel in distributing vaccines. I think there's some internal tensions going on in Europe that will complicate its relationship with the United States going forward.
I mean, so what's interesting about Europe, I think, just to reiterate your point, is just how quiet it's been, right? Just no sense of kind of when we're going to engage and what's sort of on the table when we do. So thank you for that. Hey,
yeah, I think from their perspective, I think they're happy to have, I think they're relieved to have a Biden in office, because the relationship with President Trump was acrimonious.
right.
So I think Europe is looking forward to a more normal relationship. But I think in Europe too, there's a question about U.S. leadership going forward. And is the U.S. in a state of decline? I mean, I think these are legitimate questions or sincere questions, maybe the better word, being asked at national levels across the globe. I mean, you know, what has happened in the United States over the last several years, you know, does raise questions about, you know, our international leadership, and, you know, that can embolden both friend and foe alike to reassess their relationships with us. And, you know, does Europe turn more towards China in this kind of world? I mean, what we've clearly seen in the Pacific is the U.S. re-engaging actively with other non-Chinese Asia allies, Japan, India, to name Australia, to name a couple, the Quad. Europe's not quite clear what Europe's next move is.
Right. I mean, from the U.S. and the Biden administration perspective, it's almost like, especially looking at China and Europe, there's work to do. Like, hey, you know,
Yes.
sort of developing and executing on a policy.
Sure.
In our discussion, I want to close with a concept which is a little disorienting to all of us, I imagine, which is we're just not that far away from the next election. So here we are ending the first quarter of 2020, 2021. And so, you know, we're sort of staring down in the second half of next year, the next wave of midterms. And my question to you is really around kind of behavior in Congress and what you see going on as people who are either in the Senate are up for re-election, or the House just because they are up for re-election, how that influences some of their positioning on these various issues.
So we're in really early days, not just for the obvious reasons that we're 18 months away, a little more than 18 months away from another election in the midterms, but there are a couple of factors going on at this point. One is that the retirement cycle is not over yet. We don't know who's going to be running. You've had a number of key Republican senators announce their retirement, not going to run for re-election. But that's just the beginning. I think there are more going to come, and I think they're going to come from both parties. There are going to be some surprises on both sides. That indicates, or impacts who the candidates are going to be, and candidates matter. So, and on the House side, we've just gone through the census. We're still about to have reapportionment, where congressional districts, the number of seats in each state is going to shift. So northern, more bluish states are going to lose votes, and they're going to shift into redder areas. And it's not a 1-for-1 that Republicans are going to gain every seat that goes south, but they're going to have more. They're going to pick up a preponderance of those seats that shift into redder areas. Like, I'll just give you an example. Rhode Island is going to lose a seat. They're only going to have one congressman, one representative. That's going to shift into a Florida, for example. Florida could pick up 2, 3. Same thing with Texas. Those probably lean Republican, and Republicans, despite losing the White House and nominally losing the Senate, they had a good night for House races. They had a really good night at the state level. Now, the state elections weren't as widespread, but to the extent that Republicans gain seats, that means they're in the upper hand of redrawing the maps that come out of reapportionment. So I think Republicans are in a structurally sound place. Whether they can execute and win those enough seats is yet to be seen. Let me just point out one thing, though, one item that I'm looking at. It's a special election. President Biden appointed several Democratic House members to his administration. So there are a series of special elections that have started and will be going on for the next few months. They tended to be in safe Democratic areas. But June 1 will be a special election in New Mexico to replace the former representative who's now the Secretary of Interior. And it's an Albuquerque-based district that is reliably Democratic. However, there are local issues going on in Mexico. You have the border crisis and how that, it's a border state, and how that plays out. There are local issues in terms of how progressives kind of elbowed some more moderate white progressives, elbowed out of the way some Hispanic moderates within the Democratic Party. So I'm looking at that June 1 election. I think Democrats should win it, but if it's ultra close or if it flips, I think we're going to get an early sign that the House is likely to flip in 2022. And I would also say that if it does flip, clearly the math in the House gets even tighter for Nancy Pelosi. Her majority would shrink by another vote. And if you lose an Albuquerque district, I think there are going to be a bunch of centrists within the Democratic circles who are really going to be pushing back against going too far on an infrastructure bill and on a tax bill.
Yeah, that's sort of what I was wanting to get to. It is early days, but obviously what's happening as they make their way through these different initiatives is people have to, put their stakes down and say, where are they going to vote? They're sending signals to their constituents ultimately, and you can see some movement as a result of that. So Brian, thank you so much for joining us. I want to just close out with a couple of comments, sort of reiterate where we started, which is, this was almost a look under the hood of some of the work that we do at Stifel as we're developing our views for investing, and sort of a supportive and sort of well-run government through that support is really critically important to the markets and to sort of, if you will, the economic situation, the economy, and recovery from the pandemic. So we're sort of laser focused on all of these issues. As we alluded to, identified some possible risks, but we remain constructive. And then I finally want to just mention that, this last slide, again, you can pull these slides down at stifel.com on the individuals page, but there's links to a little bit more work from Brian and myself really on the topic. And so would invite you to check these out, but also talk to your financial advisor. There's a lot more than what we've laid out here on page 12. But really appreciate everybody participating today. And Brian, I'll turn back to you just to say thank you so much for joining us.
Michael, thanks for having me. I'm just going to jump in for 1 second because there was one issue I wanted to highlight, which I think is going to be of interest to some folks. Going back to the tax issue, there's going to be a lot of debate, and it could be a critical issue on restoring the deductibility of state and local taxes. There are a lot of Northeast Democrats who are pushing hard on that, who are now starting to say they won't vote for a tax bill or an infrastructure package if the SALT doesn't get restored. That's going to meet a lot of resistance from Republicans. It's going to meet a lot of resistance from progressives. But for those of you that in those higher tax states where the SALT deductibility is an issue, I was remiss in mentioning that before. I just want to sneak it in before we finish up here. Michael, thanks for having me on. I always appreciate engaging with you and our clients.
Oh, thank you. And thanks for that last little tidbit. I'm in New Jersey, so it matters to me. Thanks everybody for joining, and have a good evening. Thank you.